Let me guess, you've checked your credit score once or twice, or maybe a few dozen times, and you've stressed out a bit. Maybe you've worried if it's good enough, or just felt a little anxious when it wasn't quite as high as you thought it should be. Don't worry, you're not alone. But here's the thing, a credit score, it's just a number, and it's not the whole story. So what do you really need to know about your credit score? Your credit score is just a number. It's just a prediction tool that lenders use to estimate how likely you are to repay them. And that's all it is. Think of it like this. Your credit score is like a trust rating in the financial world. It's a measure of how risky you look to someone who's thinking about lending you money. But here's the catch. Not all credit scores are created equal. The number you see on Credit Karma or some other app, that's usually what's called a Vantage score. It's a general estimate, not the exact number a lender is going to use when they decide whether to approve you or not. For big things like mortgages, lenders typically pull a FICO score, and even that has multiple versions depending on the type of loan. So if you've been obsessing over a number on Credit Karma, stressing that it's not high enough for a mortgage or a car loan, just take a deep breath. That number is helpful, but it's just not the full picture. The bottom line is your credit score is a tool. It's not your financial report card, it's not your self-worth, and it's not the only thing that matters when you're building wealth. Now let's talk about what really matters. Your credit score isn't just about borrowing money. Sure, it impacts things like your ability to get a loan, but it also quietly shapes a lot of other parts of your life. Let's break those down. First is your loans and interest rates, and this is the obvious one. The higher your score, the better your chance of getting approved for credit cards and loans or a mortgage, and the lower your interest rates, which means you'll pay less over time. Renting a home or an apartment. Landlords often check your credit report when you apply for a lease. A low score could mean higher deposits, stricter terms, or even getting denied. Insurance premiums. In many states, your credit score can influence how much you pay for auto or home insurance. Better credit, better rates. Job applications. In some industries, like finance or government, employers may pull a modified version of your credit report as part of your background check. They're not really checking your exact score, but they're looking at how you manage money as a sign of your responsibility. Here's the thing, your credit score can open doors or quietly hold you back. It's not just about numbers on a screen. It can affect where you live, what you drive, how much you pay, and even the jobs that you're considered for. That's why it's important to use your credit score as a tool, not just a number to chase, but a key that can help you unlock real opportunities. All right, so now that we know your credit score is just a trust rating, let's talk about what actually moves the needle, because a lot of people waste time stressing out over things that just don't matter. According to FICO, the company behind the most widely used credit scores, your score is based on 5 key factors. Here's how they break down. Payment history. This is the big one. Paying your bills on time, every time, is the single most important thing you can do for your credit. Miss a payment, and it can stick around for up to 7 years. Credit utilization. This is how much of your available credit you're using. The rule of thumb is to keep it under 30%, but if you really want to maximize your score, then you want to aim for under 10%. Next is the length of your credit history. The longer you've had credit accounts opened and in good standing, the better. That's why it's usually smart to keep old credit cards open even if you're not using them. Credit mix. This one's small, but it helps. Lenders like to see a healthy mix of credit types, like credit cards, auto loans, or a mortgage. It shows that you can handle different kinds of debt. The next one is new credit inquiries. Every time you apply for a new credit account, it creates a hard inquiry, which can temporarily lower your score. Too many of these at once can be a red flag. Now, here's the thing though. Most of your energy should go into the big two: paying your bills on time and keeping your credit utilization low. If you focus on those two, you're already ahead of the game. The rest, they're important, but they'll naturally improve over time as you manage your credit wisely. Let's be honest, we live in a world where we're taught to chase the highest number possible, whether it's likes, followers, or yes, your credit score. But here's the truth. You don't need a perfect 850 credit score to unlock financial freedom. For most people, a score of 740 or higher is considered excellent by many lenders, and that's enough to qualify for better rates on mortgages, auto loans, and credit cards. But what if you're nowhere near that 740 yet? It's okay. You're not stuck. A lower score doesn't mean you're doomed. It just means you might pay higher interest rates or need to work a little bit more strategically as you build. The goal is progress, not perfection. If your score is in the 600s or even lower, just focus on building good habits and getting it into the good range, typically 670 and above. From there, it's about consistent growth over time. Think long term. Building and maintaining a good credit score is about consistency, not just quick fixes. Don't get discouraged by small dips. Focus on the big picture and keep moving forward. When you learn how to use it strategically, you're not just playing defense. You're building real options and freedom into your life. Check your credit reports regularly. Don't just look at Credit Karma. Go to annualcreditreport.com and get your free reports from all three bureaus. Look for errors, fraudulent accounts, or anything that just seems off. The real power isn't in chasing a perfect credit score. It's in understanding how the system works, using it strategically, and staying focused on the big picture of building wealth, not just creating a higher number. If you're ready to learn how to use credit and debt intentionally to build wealth, not just to get stuck in the cycle of borrowing, watch this video next.